While everyone is fighting over $1 million apartments in Sydney, there are 3 Australian cities where investors are quietly doubling their money. And most people have never even heard of this opportunity. I just discovered something that will completely blow your mind. One Australian city has delivered 175% property growth over 20 years, absolutely crushing Sydney's returns. Another city is posting 12% annual growth right now as we speak. And there's a third, where Olympic billions are creating the biggest infrastructure boom in decades. I am about to reveal these 3 cities and exactly why they are about to explode. But first, if you don't want to miss opportunities like this, hit the subscribe button and the bell icon, because what I'm sharing isn't common knowledge. Let's talk about the elephant in the room. When most people think of Australian property investment, they immediately think Sydney and Melbourne. I get it. These are our biggest cities. They dominate the headlines and they have historically been the safe bet. But here is what's fascinating about 2025. While everyone is still fighting over overpriced properties in Sydney and Melbourne, with median prices over 1.4 million in Sydney, there's a massive shift happening that most investors are completely missing. Here is the reality check. In Sydney, you need to earn over 200k just to afford the median house. Compare that to Brisbane at 850k median, Perth at 736k median, or Adelaide at 851k. We are talking about literally half the price in some cases. Now, here is where it gets really interesting. Most people assume lower prices means lower returns, but right now, it's quite the opposite. Here are the numbers that prove everything you thought you knew about Australian property market is wrong. Brisbane is forecasted to grow 8% in 2025. Perth is already crushing it at 12% annual growth, the highest in Australia. And Adelaide just recorded the highest house price growth of any Australian city over the past 20 years with a 175% increase. Meanwhile, Sydney and Melbourne are limping along at 2 to 4% growth. So while everyone is paying premium prices for minimal growth in the safe markets, there's a complete property renaissance happening in Brisbane, Perth and Adelaide. The best part? Most investors don't even know it's happening. The real question isn't whether you should consider these cities. It's which one fits your investment strategy. Let's start with Brisbane. And this is where things get exciting. Brisbane isn't just growing, it's been completely transformed. We are talking about the 2032 Olympic Games with 7.1 billion in venue infrastructure alone. Now, here is what everyone overlooks. It's not just about the Olympics. The crossover river rail project is revolutionizing how people move around in Brisbane. This 10.2 kilometer rail line features twin tunnels under the Brisbane River, connecting 17 stations. It opens in early 2026. Let me put this in investor terms. Areas like Kangaroo Point, Tenerife and West End suburbs getting direct rail connections and are seeing 13 to 15% annual growth right now. Median prices hit $1.1 to $1.2 million, but that's still 20 to 30% cheaper than equivalent Sydney areas. The rental market, Brisbane units deliver 4.5% rental yields, the highest among major capitals. Compare that to Sydney's 2 to 3% yield. Are you new to property investing? Think of it this way. When governments spend billions on infrastructure, nearby property values rise. It's like buying a house and discovering they're building a train station down the street. Except in Brisbane, we know exactly where that infrastructure is going. Perth. Moving to Perth, this might be 2025's biggest hidden opportunity. While everyone wrote off Western Australia, something incredible was happening behind the scenes. Perth just recorded 12% annual property growth, Australia's highest. The median dwelling value hit 736k, still incredibly affordable compared to eastern capitals. What is driving this boom goes beyond mining, though that certainly is a little part of it. Western Australia added 72,000 new residents recently, a 3.1% growth rate, the country's highest. That's approximately 50,000 people from overseas migration plus approximately 9,000 from interstate migration. Here is what matters for the investors. Rental vacancy rates in Perth sits at just 1.2%. When vacancy rates drop that low, rents rise fast. Perth units are delivering 5.7% rental yields, with some areas hitting 6.2%. The mining sector in Western Australia employs a record 135k people, nearly half Australia's total mining workforce. This isn't slowing down either. 50 mining and oil and gas projects in the pipeline will need over 11,000 new workers by 2029. For investors, this creates sustained employment growth, population growth and housing demand. It's the perfect storm for property appreciation. Finally, Adelaide, the city that's been flying completely under the radar. This might be the biggest sleeper opportunity of all. Adelaide just recorded the highest house price growth among Australian cities over the past 20 years, 175% growth from 2005 to 2024. Yet, it remains incredibly affordable. The median dwelling value in Adelaide sits at around 851k. Here is the comparison that will shock you. In Adelaide, the median house price equals 7.3 times the average wage. In Sydney, it's 11.4 times. Adelaide is literally 30% more affordable in relation to the incomes. What's driving the current boom? Listings in Adelaide are down 33% compared to the 5-year average. That's a massive supply shortage. When you have a growing population, Adelaide expects 22k new residents in 2025, but fewer available properties. Prices can only go up. Adelaide unit market is leading the change with 7.7% annual growth, outpacing even houses. First-time investors can still secure entry-level house and land packages for around 600k compared to 650k in Melbourne. Now, here is what makes 2025 the perfect time for these three cities. The Reserve Bank has been cutting interest rates. We have had cuts in February, May and August 2025, bringing the cash rate down to 3.60%. Most banks are predicting it will hit 3.35% by the end of 2025. Lower interest rates mean higher borrowing capacity. And when you combine that with the relative affordability of Brisbane, Perth and Adelaide, you get a massive opportunity. Think about it. A 0.25% rate cut might increase your borrowing power by $30,000 to $50,000. In Sydney, that barely makes a dent because everything is already so expensive. But in these three cities, that extra borrowing power can be the difference between missing out and securing a great investment property. We are looking at the perfect combination. Infrastructure investment in Brisbane, resource boom in Perth, affordability advantage in Adelaide, plus falling interest rates across the board. Alright, so if you are a beginner investor watching this and thinking, this sounds great, but what do I actually do? Here is your action plan. First, choose your strategy. If you want capital growth plus decent yields, Brisbane is your best bet with that 4.5% rental yield and the Olympic infrastructure boom. If you want the highest growth potential and don't mind a bit more risk, Perth with its 12% growth is hard to ignore. If affordability is your priority and you want steady growth, Adelaide offers the best entry point. Second, get your finances sorted. Use a mortgage calculator to see what these lower prices mean for your borrowing capacity. You might be surprised at what you can afford in these markets versus Sydney or Melbourne. Third, do your suburb research within each city. Not every area is growing equally. In Brisbane, focus on cross-river rail corridors. In Perth, look at the inner suburbs benefiting from the population boom. In Adelaide, target areas with good infrastructure and transport links. Fourth, consider the timing. These markets are moving fast, but they are not at Sydney 2020 bubble levels yet. There is still opportunity, but windows don't stay open forever. Look, I can't predict the future, but the data tells a compelling story. Whilst everyone is fighting over scraps in overpriced Sydney and Melbourne markets, there's a genuine opportunity in Brisbane, Perth and Adelaide right now. The infrastructure is being built, the populations are growing, interest rates are falling and prices remain reasonable. You don't see that combination often in the property investing market. Here is the reality. Opportunities like this don't last forever. By the time everyone is talking about these markets, the best deals will be gone. If this video opened your eyes to opportunities you hadn't considered, hit that like button. And if you want to stay ahead of the curve and discover the next property opportunities before they go mainstream, subscribe and hit that notification bell. I'm constantly analyzing market data, tracking infrastructure projects, and finding those hidden gems other investors miss. Your future self will thank you for staying informed. What do you think? Are you considering any of these three markets? Drop a comment below and let me know which city caught your attention and why. I read every comment and love hearing about your investment journeys. Until next time, keep investing smart and remember, sometimes the best opportunities are hiding in plain sight.